Welcome to Morningstar. At a time when the world needs more clean energy than ever, wind energy companies are faced with several challenges, including skyrocketing costs, billions in write-downs after cancelled projects, and a struggle to secure long-term buyers. Two of the world's leading players in the industry have just released their earnings for the second quarter, and Morningstar senior analyst Matthew Donen is joining me today to dive deeper into all of the drama. Matthew, let's start with Vestas. They released their earnings yesterday. What was your take on the report?
Yes, it's been a very eventful week if you're a Vestas shareholder. They actually released an unscheduled trading update on Monday, a few days ahead of its earnings release, which contained a profit warning catching investors off guard and sent the share price 8% lower on the day. A 300 million revision in the service cost required to service its fleet of wind turbines led to another quarter of operating losses for Vestas. This is now the second consecutive quarter of operating losses, with the company having initially guided for a profit margin of between 4 and 5%. So definitely catching investors off guard. While we don't expect the disappointing Q2 to reflect into the remainder of the year, it does require a significant improvement in performance for the remainder of the year, and we did lower our fair value estimate by 3% to 180 Danish kroners.
So as you mentioned, Vestas shares were hit on Monday, but we also saw the same with Ørsted today when they reported the Q2 earnings. What was it that surprised the market, do you think, here? I mean, there's been evidence of challenges in the sector for quite a while, right?
Yes, and I mean, investors hate surprises, and both Vestas and Ørsted delivered surprises in their second quarter earnings release. In Vestas's case, it was the hit to the service business, which saw it report an operating loss for the quarter. In Ørsted's case, they announced another $500 million impairment, which caught investors off guard, and they reported a net loss for the quarter above 1.5 billion Danish kroners.
So if we look at the share price of Vestas and Ørsted since the start of the year, there's two different stories playing out. We have Ørsted at around 4% higher, while Vestas is down around 26%. Why is that?
I think a lot of that has to do with the investor sentiment surrounding both those businesses as we entered 2024. In Vestas's case, the momentum was quite positive, having delivered a second half of 2023 profitability. Obviously, their performance in the first and second quarter have been very disappointing, with two consecutive quarters of operating losses. Whereas in Ørsted's case, the sentiment was extremely negative. They reported billions of dollars in impairments and cancellations of projects, particularly in the US. And I think the market was ignoring some of the growth prospects that Ørsted had. And even though they had a bit of a hiccup in today's results, they did confirm their full year guidance, which is quite positive and reassuring for investors. Ultimately, I think investors in both companies will need a few more consecutive quarters of stable performance before confidence is reassured.
So looking at the wind energy sector as a whole, then, what would you say are the main opportunities and challenges going forward?
The biggest opportunity is the acceleration in the renewable energy transition. And I think that was evidenced in COP28's goal of tripling renewable energy capacity by 2030. We're also seeing an increase in electricity demand because of data centers and their importance in AI adoption. And then in terms of the challenges, I think the biggest two we see is an increase in wind turbine prices, which discourages investment into new renewable energy projects, as well as upcoming elections in certain geographies where there's a very polarizing view on clean energy.
Thank you for joining me today, Matthew. And until next time, I'm Joanna England for Morningstar.